Hello, everyone. Today I'm just going to talk about Starbucks for a quick second. Um, Last week it hit a new 52-week low of $68. It's now trading at $75. Could be a time to get in. Pays a nice dividend of 49 cents a share quarterly. Let's see, the price to earnings ratio is 20. That's really good. The return on assets is 10.48%. That could be better. Quarterly earnings growth year over year is 31.10%. It's good. Operating margin is 16.23%. That's better than the average of 14%. They have more debt than cash, but let me see what else we got going on here. And more debt, that's okay, but I think with big companies like this, if they have more debt than cash. But let me read this article from Seeking Alpha real quick. And I have asthma, so if I start wheezing through this article, that's why. But, okay, here we go. Starbucks has hit a 52-week low amid unionization, and COVID headwinds. Is it time to buy? Starbucks is hit a 52-week low this week despite the coffee chain reporting that consumer demand is so hot. It's having a hard time keeping up. The strong underlying fundamentals have been undercut by headwinds ranging from unionization in the U.S. to ongoing COVID restrictions in China. Is now the time to buy. Starbucks drops on unions, COVID, while market turbulence fueled by escalating inflation and the Ukraine conflict has pulled down many of the market's most popular stocks. Starbucks has been particularly hit hard. It tumbled 40% since the beginning of the year. In comparison, the S&P 500 index has declined 15%. Investors have moved to the sidelines over concerns that range from the impact of the COVID-19 lockdown in China to worker efforts to unionize in the U.S. As a result, Starbucks shares reached $69 per share on Wednesday, a new 52-week low. Thursday's pre-market action showed signs of further weakness, suggesting that the stock would likely extend that low. The stock did get a boost on May 4th after it released a relatively positive Q2 earnings report that showed U.S. comparable store sales jumped 12% over the previous year's quarter. This strength in the U.S. offset a decline in Chinese, where I think that means in China, where pandemic-related shutdowns cut into the sales. However, the company also dropped its fiscal 2022 guidance due to uncertainty over the duration of the Chinese lockdowns and rising inflation. Still, investors appeared to be particularly heartened by comments made by interim Starbucks CEO Howard Schultz on the company's quarterly conference call that demand for its coffee products was so high it was having a hard time keeping up. He added that the company planned to make significant investments in its stores and digital capabilities to capitalize on the increase in demand. Yeah, I think I heard about they were planning on doing a share buyback, but instead they went with investing in the stores, and yeah, that's not good for the stock, but maybe in the long term that could be better for the stock, because you want to invest in the stores, and Howard Schultz, he knows what he's doing to get, of course he knows how to get the company going again. So investment in the stores as opposed to the share buyback might not be that bad. That could be good. Schultz, who recently returned to the CEO role after a several-year hiatus, also said Starbucks planned to raise wages and enhance benefits for workers at non-union stores, The pay hikes and improved benefits, however, would not be immediately seen at union stores due to certain legal restrictions. That's something I agree with. Um, just my opinion again. Um, a lot of people tend to look at, they make fun of Starbucks work. When they say they want a higher pay wage, hourly rate wage, people make fun of that. Like, oh, you just work at a Starbucks. But I don't like that because as me, someone that's worked, like 100 jobs that were menial, and I've worked in plenty of retail stores, and they are really demanding and hard work. They were much harder than any job I've had that was sitting behind a desk, or you know what I mean, like anything like that. So I think people that make fun of these workers that want a higher wage, they just never worked these type of jobs. That's that's all that there is to it. I mean, that's got to be it. I mean, unless you work these type of jobs, you know how hard and demanding it is to work in these high-paced retail stores where you're just the menial worker and you have to do everything. But all right, either way. So, is Starbucks a buy? Back to the Seeking Alpha article. Despite the ongoing pandemic and unionization push, Wall Street analysts still rate Starbucks a buy. On average, as of Wednesday, 10 rated the company a strong buy, 7 a buy, and 17 a hold. None rated of the analysts tracked by Seeking Alpha rated it a sell. Seeking Alpha authors, on average, also have a buy rating on the stock. So, yeah, we went over some of the numbers of Starbucks. It's pretty good. It's at its 52-week low. Tell me what you think. Is it time to get in Starbucks, or are you staying away from it? Let me know in the comments. And let's have a great week this week. All right? Bye-bye.